All right. Hey guys, what's up? Welcome to the Dude Real Estate Show. Here with Billy once again. This is like session, I don't know, 8 or 9. We're moving right along here. Billy, how are you?
I'm good. You're right. I feel like this is 8. I just know it. I've got a
You
feeling.
know, yeah, there you go. Okay. Right on. Yeah, just so you guys know, anyone that's watching or listening, we have quite a few more of these to go.
Mhm.
All planned out. We've got roughly 40 of these. So follow us on the journey. And I'm hoping sooner rather than later, we can get Billy his first deal, and we'll detail that when we get there. I'm excited. In fact, my dad kind of called you out. Like he's one of the two, subscribers that actually watches my videos. And so he said, I can't wait until Billy actually starts to go look at houses and decides which one to buy. And I couldn't agree with him more. So
Dang.
we're gonna push you that way and get you out there, hopefully to find you a good deal sooner rather than later.
Love it. Love it. And there's one thing I would like to add that's great. And we talked about this after our session last time. But in everything in life, and why we both agreed to do this, I think, is you usually have someone who can help mentor or mentee you towards the goal. Whether that's when you're starting out in school, you've got a teacher. When you start working, you have a manager. In college, you've got a professor. All the way through, usually you have someone who can help you along the way. And I think, I've talked with you multiple times, and I really think you can help me take that next step and get a deal. So yes, Nate's dad, I am going to make this happen.
Good. You heard it here first, folks. Billy's going to make it happen. So yeah, I hope we do. I hope we do. And I hope it's an awesome deal. We're going to have a lot of fun with it, and we'll get out of our little office space here and actually out into the real world, and go look at some properties and analyze some deals and see how it all comes together. So, but still, we're going to talk about a few other things to help move us that way. So today we're going to talk about choosing your investing strategy.
Mhm.
So for everyone, this is going to look a little bit different, but I see people mostly uh, choosing one, maybe two strategies when they're getting started, and
Mhm.
that's usually fix and flips
Mhm.
or rental properties, whether it's a single family house or maybe a 2 to 4 unit. So
Mhm.
that's what I see for the most part when people are first getting started, is they choose one of those. And I'm no different. I mean, the first house we bought was a single family. So there you go. It's just kind of what people understand the most. Most people grew up in either a single family or a small multifamily type of situation. And so they understand the basics. They're like, okay, we either own this house or we rented it. Everyone has some experience with living somewhere. And that's why real estate's so appealing to so many people too, is because it's not that difficult to understand. Even if you are a renter your whole life, or your parents were renters, you still understand how it works. It's like you live in a place, you pay the rent, you get to live there. I mean, it's pretty basic thing, and it's been done for thousands of years. So
Mhm.
that's why real estate's a really great tool to get you where you want to go, because we know that it works. So
Mhm. Yeah.
it's maybe not the flashiest thing out there, like a Bitcoin or a tech stock or something like that. But we know that it's going to get us to where we want to go. But we need to have a strategy to get there. So let's rewind the clock a little bit. Let's go back to, what were some of your goals? Refresh us, remind us what some of your goals were.
Yeah. So the first goal was to retire by 35, which was more of a general statement goal. And then the second goal was to have income outside of my W-2 job that covers my living expenses, or my expenses, my monthly expenses. So that, in my mind, what that means for what strategy I should look for is definitely buying rentals, because fix and flip is definitely something where you're going to get an income now, but it's not guaranteed in the future. You have to still find that next deal. So in my mind, it makes sense to do the buy and hold strategy, just because that's going to cover expenses going forward, which is my goal.
Right. Yeah. And I think that makes a lot of sense. So essentially, you already know your strategy, and we're done with this video. So Congrats to us. No. I do want to talk a little bit about those two strategies of fix and flip or rental properties. Yeah, you kind of do have to work that process backward from your goals. That's why I asked about your goals.
Yeah.
Um, I think you've picked the right strategy. But there are a couple other things to think about. One is, how are you going to pay for the rentals?
Yeah.
Is it going to come all out of your pocket? And if so, how many rentals can you buy over time? Like, is it going to be one every 5 years? Are you going to partner with some private money lenders or another partner in some way so you can scale it faster? I did post a video. It was actually the last video on the channel of what I would do differently if I started over today.
Mm-hmm.
And essentially, I would employ those two strategies, the fix and flips and the rentals, but bring them together. And so what I basically talked about a little bit was I would do a couple of fix and flips. And then with the funds from one of them, I would live on that. And the funds from the other one, I would buy a rental property.
Okay.
And just kind of rinse and repeat. And that's kind of like a very basic way to think about it. So I don't know exactly how many properties you want or what your, freedom number is, but how many rentals do you think you need at this point to achieve what you're kind of looking to do?
That's a great question. So I think it's going to take probably 10 to 20 properties, with the idea that they would be cash flowing, $2,000 or $200 a month is kind of in like a ballpark. Like if I'm living bare bones and I needed to just be done working, that's kind of what I see being the minimum viable product.
Mm-hmm.
I guess MVP for me.
Yep. Yeah. And so basically, if your positive cash flow is $200 per unit,
Mm-hmm.
and you had 20 of those units, that would provide you with enough passive income to probably retire at that point, or at least have more flexibility, more financial freedom. The nice thing is when we set these goals, like, it doesn't have to be anything ostentatious, because the really nice thing that some people who only have like a stock portfolio, like,
Mm-hmm.
they don't know, like, if they're using kind of that 4% rule where they can access 4% of their portfolio and not really hit the they don't have to take anything away from it, essentially,
Mm-hmm.
and keep it all intact. But with real estate, the nice thing is you can give yourself a raise. As you're paying down debt, you can either refinance properties
Mm-hmm.
and get more cash flow that way, or once you pay one off, your cash flow kind of explodes at that point. Plus, rents tend to go up.
Right.
So there's a few different ways that you can keep increasing these numbers over time. So your initial goal doesn't have to be something extravagant. It could be 5 or 10 properties, but then over time, if you're doing those things like refinancing, raising rents, paying them off,
Sure.
you get paid a lot more money for sure.
Got it. So in your mind, it might actually make more sense for me to focus on either like a fix and flip and then use the money from the fix and flip to put into a buy and hold, or, do a BRRRR, a buy, rehab, rent, or finance, repeat is kind of what, so you're kind of your suggestion would be to focus more on finding good deals is kind of what I'm hearing, or.
Well, finding good deals is always going to be one of the number one things, whether it's a fix and flip or buy and hold, more so for a fix and flip because there's less margin of error.
Yeah.
The longer you hold a property, the more forgiveness you kind of have. So even if you bought kind of a stinky deal, if you hold on to it and manage it right over time, like, you can't get hurt too bad.
Right.
Unless it's like super negative cash flow the entire time. Like, that's just a recipe for disaster. But in any market, even a very up market like we're at now, if you can find a property that cash flows, even just say $25 a month to the positive after all your expenses, including CapEx and all that stuff, you can't get hurt that bad. And the only thing that can hurt you really is a long-term vacancy,
Mm-hmm.
or if rents go down. And really the only places we see rents go down substantially is like right now in New York City, where
Mm-hmm.
they just built so much, and then there's a lot of vacancies and pressure from unemployment and COVID and all that stuff, and that's
Right.
going to push some of the rents down. But generally speaking, if you go anywhere else across the country and you look at trends, rents just go up. um, you
Mm-hmm.
know I don't know the exact number, but if I had to guess, it's probably between 2 and 4% a year. And depending on the demographics and what's going on in a certain place, it's just gonna it could be even more. So
Sure.
anyway, I don't know if for your scenario I would do a fix and flip, but if that's attractive to you where you wouldn't have to pull funds necessarily to buy the rental like from your savings or something like that, and you could instead focus on a fix and flip and then use those funds to buy a rental, that
Mm-hmm.
is a way you can go. And you could do that because you wouldn't need the funds from the fix and flip for your personal living expenses
Right.
because you have a job. So you've got your W-2 job, you're already making an income. Anything that you make from a fix and flip really could just go, everything could go right over to a rental. Now the problem there is your timeline might look a little bit longer in some regards, where if you
Mm-hmm.
first have to do a fix and flip, it's going to take you some time to find that, do it, and do it right. It's either
Right.
you're making enough money, and then you have to find another property. So
Mm-hmm.
if you didn't have to do the fix and flip, you could jump right into just finding the first property and getting right in there. And part of it has to be your comfort level too. Fix and flips are kind of risky,
Sure.
especially I think in the current market there could be some risk. Um,
Yeah.
so it's tough, and but if you have multiple exit strategies too, that can help. So
Sure.
maybe your goal is to fix and flip it, but at the end of the day, you're like, actually, this is going to be a great rental.
Mm-hmm.
Then make it a rental. You don't have to fix and flip it. So the more exit strategies you have, the better in cases like that too.
Got it. Got it. So if you had to start out right now, I guess the question for me is, one, how much money do you think is necessary to invest in real estate for a beginner? And then two, given that either you do have that much money or you don't, does that change the strategy you're going to go towards?
Right. So if I was to start over, and again, this kind of goes back to this video I had just uploaded. There's two paths. So one is if you have a job like yourself,
Mm-hmm.
you can do one fix and flip and then buy a rental. And that's what I would do if I had a steady income. If I wanted to be totally independent, not rely on a W-2 job, I would do two fix and flips and then buy a rental. So then I
Okay.
would live off the money from one and then
Mm-hmm.
invest the money from the other, to buy that rental. And then over time, you kind of figure out what you like a little bit better. Maybe you really like the fix and flip side, or maybe you like the rental
Sure.
side, and then you kind of go all in on what makes more sense for you. So, what are you thinking like right now? What's kind of going through your head as far as you want rentals.
Yeah.
Do you want to use your own money? Are you thinking maybe possibly private money? Are you thinking maybe a fix and flip would be an option, or does that kind of scare you?
I think, yeah, I think that's the hard part, is like nailing down, like I know what my goal is, and it feels like buy and hold would be the best route, but it probably is also going to be the slowest route because I'm going to have to generate the income from somewhere else, which is currently my W-2 job. So appealing wise, I'd like to, potentially do a fix and flip. But being someone with not a lot of experience in the construction space, it can be scary. So, any tips for, I guess, focusing on which one should I focus on? And then, if it is fix and flip, how do I vet a deal like that?
Sure. Well, I think the most important thing for anyone who doesn't have a deal under their belt is to
Hmm.
get a deal under their belt. And I think the lower risk option is a rental.
Yeah.
Um, you know, essentially that's kind of the path I took, I guess, because we bought a couple of rentals, but then I had
Hmm.
been through the rehab process as well, so I had a little more comfort. I was like, okay, now on the side, I'm going to go do some fix and flips. So for me,
Hmm.
it's kind of the reverse in a sense. But now that I
Yeah.
have that experience, I'd start with the fix and flips and move to the rentals. So so for you, I think it probably makes more sense, get that buy and hold, and then maybe your next 2 or 3 deals are flips. Who knows? I mean,
Sure.
you know, it's all about building a team, and the contracting side of things is kind of scary because there's a lot of
Hmm.
unknowns, especially if you're not handy. If you're like me and all you can do is like paint a wall, and even that's kind of bad, then, you know, you need to rely on other people and their skills to do the work for you.
Right.
So, you know, even if your first rental doesn't need a ton of work, it's probably going to need something. You know, it's probably
Hmm.
going to need new flooring or paint or, you know, a new HVAC system or whatever. And you're going to meet some people. And then, you know, like through our networking group and stuff like that, we have a nice group where we can bounce recommendations and ideas off of people to figure, you know, fill in those gaps of where we don't have those skills, because no
Sure.
one's ever going to be the whole package. No one's ever going to be able to find the deal, manage the deal, do the entire rehab, sell the property, manage the property, whatever. Like, just no one can do that. And even if you could, you wouldn't want to do that because you'd spend 100 hours a week. And at the end of the day, you're making, you know, $5 an hour.
Yeah.
So, you know, you got to delegate the stuff that needs to be delegated.
Yeah. Okay.
So, I know we've kind of talked a lot about this stuff. Uh, where where do you think you're at right now? Like, what would be your ideal first step, I guess?
Yeah, I think kind of just talking about it out loud with you, I'm definitely want to focus on the buy and hold side, just being that it is the first time and I don't have all those tools on my tool belt, so to speak. What is that, Brandon Turner who always says that? On bigger pockets.
Yep.
So I think I need to just work on getting one tool. Like you said, without doing the first deal, there's never going to be a second deal. And so in order to do that, I feel most comfortable looking at a buy and hold.
Yeah, I think that makes sense because um, even if there's minimal rehab, you know, something like that, there's just a lot less risk because you can analyze the numbers, and we'll go over this in a future video. But once you analyze the numbers, you're like, okay, we're cash flowing $200 a month on this thing, even after all our capital expenditures, and we account for vacancy loss and all this kind of stuff.
Hmm.
Like, you just can't get hurt as much as like with a fix and flip. A couple bad things can happen, and like, you're almost always over budget, you're always over
Yeah.
the timeline, and if you have a market shift that goes down, that's really bad too.
Yeah.
So there's more negatives with a fix and flip, and that's why that could be something you utilize in the future once you get some more experience, build up, you know, a team that you're comfortable with, you know, working on projects and stuff. And so yeah, I'm totally on board with. I think rental is probably the best strategy for you,
Hmm.
at least for your first deal.
Yeah. Agreed.
So let's go find one.
Let's do it.
All right, we're gonna go find a rental. Let's go find a deal. All right, guys, thanks for watching this one. We'll see you in the next video.